The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to this Wednesday webinar in a crazy market, right? Well, we're going to actually be looking at those markets today as we go through the new Nadex platform. So we are going to be doing a platform tutorial, but it is going to be entirely centered around our products, trading binary options and knockouts. So it's going to be both practical in regards to learning how to use the tools, and we will be looking at some live markets. So it puts it in perspective, in context. So even on days like today, yes, you can trade these markets, right? Before I do anything, and I apologize, I'm a little under the weather today, so if I don't sound like my normal excited self, I'm just trying to drink some coffee here and deal with all the complexities of life right now as we go through. It looks like wave two uh, of what's going on. Before I start, I always have to bring up this compliance slide. And it is important that you do take a look at this. Trading does involve risk, whether it's at Nadex or any place, and that any trading decisions and the responsibility of that risk is yours and yours alone. What I would like to really point out is this is an educational session. I'm going to be in a demo environment, probably, because I would like to actually do a couple of demo trades. They're practice trades. So it's not real, but the data is real. And as such, it's really important for you to note that I am not making a buy or sell recommendation for anything. So don't construe anything I say today as a buy or sell recommendation. This is strictly for your educational purposes, and the best way to help someone along the path is to show people. It's to show them the platform and show them the products and the tools that are available in the platform. As I like to say, my mom is from the great state of Missouri, which is the show me state, right? So I am going to show you. Um, Before I go into what I'm going to show you, I like to always put this up front as well. We're here to help you, all right? And that's actually for this session, for anything. We want to help. Call us. There's a phone number. There's an email address. We have chat functionality on our website where you can open up a chat box and just chat online. We make ourselves available to you if you've got questions about your account, about the products, how to operate the platform, any questions at all, concerns, anything we could be doing to help you along your journey, please reach out to us. And I'll even go so far as to say if there's some topics of education that you would like to see more of, please let us know. In fact, I'm going to put a plug in for that before we even start. In as much as there's some cool things that we've got going on here at Nadex in terms of our website, in terms of our platform, and in terms of education. So everything for our customers and anything we can do. So you're going to get a taste of that in 1 second. But what I am going to do today is I am going to jump over to the platform. I usually start with knockouts. If you're not familiar with knockouts, you'll see what they are. It's to me, it's the most intuitive product we have because you're just trading the price of an underlying asset. And it's just got defined risk boundaries around it, which is great because it forces you to be a more disciplined trader in some regard. It takes some of the emotion out of it if you choose the right contract. So knockouts are an incredible opportunity, particularly in markets like this, and you will see that when I show you. I'm going to spend some time on the platform. I'm going to show you some of the technical analysis tools that we have, the charting functionality, ways to analyze the markets, different tools that are available for you to identify your support resistance levels, channels, trends. We've got plenty of overlays that can help you analyze the markets for you to make your trading decisions. I'm going to show you those. And I'm going to also, we'll go into binaries afterwards. The reason I like to start with knockouts is knockouts, you're trading an underlying product. Binary, you're actually trading the probability of something happening. So the price that you're looking at is different than the actual price of the underlying. Knockouts are what we call delta one. It is what it is. Binaries are a little different. And then the reason I like to end with binaries is we're going to go through a 5-minute binary example where you can really watch the price action. A lot of people really like 5-minute binaries. They're in our FX products, and it just amplifies what a binary does in a very short period of time. Some people want that kind of price action in a very short period of time. Other people want to trade other products like indices, commodities, and the binaries there aren't 5 minutes. They can be as short as 20 minutes or out for a week. So we will get there, but the logic and the flow through makes sense. Oops. What I would like to do now is I am going to share a different screen if I can. Here we go. Okay. By the way, I mentioned that we're here to help, and this is an interactive session. Very important. I have got my colleague Sophia in the background. There's a questions box down below. Type in questions. In fact, give her a shout out. Make sure she's staying and paying attention. But Sophia is terrific. So as we go, if I go too quickly over something or you'd like some more clarity, please type questions into Sophia. And in fact, if you've got ideas on what you would like to see for future webinar topics, you could type those in as well. She'll make note of those, and we'll see what we can do to make sure that we're delivering what you want. All right, now here's our website. Actually, before I go to our website, I am also going to mention that this is being recorded. You will find the recordings. Up here is our webinars page, and we put all of our on-demand and upcoming webinars here. I am going to tell you, though, we're going to be going with a brand new website very soon. In fact, it could be as soon as Monday. So it's really cool. I think you're going to like it. It really fits more with what Nadex is. It's been time for a refresh. So stay tuned to our website. But there will be a webinars section on the new website, just like there is here, where you can find all of our upcoming events as well as all of our on-demand content. Now, the other place that we put on-demand content, and I would highly encourage you to do this, and you could share it with your friends, is our YouTube channel. You go to YouTube and you put in and you search for Nadex, you will find the Nadex YouTube channel. We have a lot of content up here. People like to binge watch and binge watch in their leisure. It's the same with educational content. People would rather watch it in their own time, or they want to go back and review it. And they want to pick and choose what they watch. I mentioned that we're coming out with a new website. We're also doing more education. If you missed it, we did a virtual education summit about a month ago. 1 day of basics, 1 day of advanced. We're going to be doing another one of these later this summer. I think we're going to expand on it. This was a 2-day event. I think we're going to make the next one a 3-day event. We record all the content. If you missed it, I'm actually going to click on that virtual education summit, and you can see what we actually covered. Basics of binaries, basics of knockouts, an introduction to technical analysis, a session similar to what I'm doing right now, which is using charts in the platform. On day 2, we went a little bit more in deep on technical analysis, on a particular technical indicator, average true range. We did a knockout strategy with a partner of ours, and then a more advanced binary option strategy, Strangles, my colleague Dan Cook. Review these at your leisure. It's all recorded. It's there for you to watch. Share it with your friends. Anyone wants to know. I mean, this was an incredible event, very successful. People really liked the content. We're looking to do something again, we're just going to beef it up. So I would recommend go to our YouTube channel and check things out there. All right, I am going to go back to our platform, and I'm going to make this bigger and easier for you to see. And now, again, this is going to be new soon, but I'm going to go ahead and log on to an account. So I'm going to hit login. Now, I told you we have a lot of new things happening. A new website, more educational events, particularly concentrated events like summits, all online. We give it away for free, and we record it and make it available afterwards. We are also pushing out our new platform very soon. When you come to the login page right now, you would log in and you would go to our old platform. Very soon, we're going to force people, when a new person will just go to the new platform. And then we're going to migrate eventually anyone who's using the old platform to the new platform. So I would encourage you to start actually do it yourself. Now, when I say go to the new platform, that is up here in the corner. It says join the beta. It is not beta anymore. It is the new platform, and it will become the primary platform. So everything I do, I'm going to hit join the beta, and this is the new environment. It is cleaner, easier to use, much more intuitive, and it's got more robust functionality than the current standard platform. Particularly when it comes to technical analysis, charting, indicators, we've got more here than the other one. So I would encourage you, if you're not using this, to start using it and getting comfortable with it. All right, when you come into the new platform, you'll notice that there are essentially three sections. On the left, we've got our products, and they're sorted into buckets: binary options, call spreads, and I will talk a bit about call spreads as well, and our knockouts. All right, at the bottom is the positions, and right now we don't have any positions, but I'll bring that up and down periodically through the session as we put on some trades, and you can see trades going into the orders, trades getting executed, things of that nature. And then our primary workspace, which is currently empty because we haven't done anything yet. I am going to point out in our binary options, you'll notice that we've got products in indices, foreign exchange. We have event contracts like non-farm payroll, unemployment reports. Not as much price action in these, but very popular for people to predict what number might get reported by the government. Is it going to be above? In fact, I think we've actually got one coming up this Friday. Yeah, here it is, the jobless claims report. So, and you can actually see what people are predicting. Is it going to be greater than or equal to a number? Right now, it looks like, is it going to be greater or equal than 1,350,000? And you can make your prediction. Okay, you can make your prediction, yes or no. We'll get into the binaries later, but they could be rather interesting. Again, not a lot of price action, but certainly if you have an opinion, a great opportunity. Our call spreads, and then I am going to start with knockouts, indices, foreign exchange, commodities, and we're going to actually look at some markets. Now, I am going to tell you, if you notice in the upper right-hand corner, this says demo. This is a demo environment. If you don't have a demo account, I highly encourage you to get one. You can practice trading for free. It is practice money. We will fund it with fake money. It's paper money, but you can get comfortable moving around the platform if you're not used to it. If you're not familiar with the products, you can practice trade and see what happens. We find that customers that use the demo functionality before going into a live account tend to have a better rate of being successful, probably because they're more comfortable maneuvering around the platform, and they're also much more familiar with how the products work, how they trade, how the prices move, and what happens as you get closer and closer to settlement. Now, the prices in our demo environment should mirror what's in the live environment. It doesn't always work that way. So as I'm going through this, we might notice something a little different because it is a demo environment. But that's one of the cool things about it is you do get a truer feel because it's not entirely made up. We are trying to pump live data into here. It's just not live trading. All right, let's get into knockouts. And I am going to, just because we've had such a crazy day, right? I'm going to go into the indices and look for our knockouts. We've got the S&P 500, the small cap, the Russell 2000, the Nasdaq, which is the Tech 100, and the Dow Jones Industrial Average, the Wall Street 30. Let's face it, these markets have been moving all over the place, and we're really not certain what's going to move them next. What was it? 2 nights ago, Navarro in the middle of the night had mentioned that our trade deals with China were over. The market tanked overnight. He immediately retracted his statement, and the president came out and said no, he was mistaken, and the market immediately rallied all the way back and then went higher. Today, as the concerns around a second wave of coronavirus in certain spots, we know the market's down actually pretty significantly today, which is what helps some of these products. I'm going to go ahead and click on the US 500, the S&P 500, and I'm going to open up any one of our knockouts. It doesn't matter which one I open up because they're all on the chart. I am now going to go ahead and click hide, and I am going to also hide the positions so that we can maximize our real estate here on our chart and our order ticket, our workspace, the chart on the left, the order ticket on the right. If you have multiple screens, you can tear these off, and I'm working with one screen, but you can tear off and have, let's say you have 3 screens, one on the left, the center one, and one on the right. You can put a chart and an order ticket on your left screen, a chart and an order ticket on your right screen, and you can have a third chart and order ticket on your right in your center. And you could be watching 3 markets at once and be able to quickly, easily place a trade in one of those markets. We do have tear off charts and tear off order tickets. So some cool functionality that that people have been asking for. One of the cool things that we finally got into the new platform. Now, what am I looking at when I look at knockouts? I'm looking at a chart here, and it looks like this is just the last day. This is just the last day. You can see, you can set your parameters in the upper left hand corner. You can set how long. I've got a 1 minute chart just so we can kind of follow along with these different candles. If you're not familiar with what candles are, or how to read these, go back to our virtual education day, an introduction to charts. It's great. It talks about candlestick charts. It talks about how you can read these. What are these lines? We're going to be doing more of that, but we do have something relatively recently from our virtual education day from day one on the basics of charts. Now, we can see that the S&P 500 has clearly gone down. And notice that we've got 4 knockouts. There are always 4 knockouts for every product. And they're defined by these blue lines on the left-hand side. Now, what is a knockout? I'm going to pick this one right at the top. Oh, nope, that one actually knocked out and probably. So here we go. I'm going to pick this one right here. And it notice how it gives me these dark blue lines, and it tells me that there's a ceiling that's 3066 and a floor, 3016. Okay, and it defines it in the order ticket as well. What am I trading when I trade a knockout? You can see that the current indicative price of the S&P contract is 30.39, 30.40, right around 30.40, a little higher, 30.40 and a half. It's ticking up. Notice that the price that you see that you can either buy or sell, okay, is right around the price of the indicative price of the underlying. In fact, you can see the indicative price here on the chart. You can also see it on the order ticket. So what am I trading? As I mentioned, it's a Delta One product. You can either buy or sell the price of the S&P 500, and all you're saying, if you buy it, you think it's going up. If you sell it, you think it's going down. Okay? It's a directional play. Do I think it's going up? Do I think it's going down? Now, what do the floor and the ceiling do for me? Those are your risk parameters. If you're wrong or if you're right, it will knock you out of the trade at some point. All right, and then the contract simply settles and a new contract is immediately added. So, for instance, let's say that, I mean, I see that we have been in a big downtrend here. We've rallied back some, and maybe I think this is going to go lower again. I'm going to simply sell one of these because I think it's going lower. Not a buy, sell, or hold recommendation. I'm just clicking on the bid. And I am going to, let's put an order at 30, 40, and I'm going to put one between the market, 20. Okay, and I'm going to place my order. Notice how, oh, look at that. It immediately went down a little further. You know what? Let's change that price. So we're going to, because I want to stay, look at it, it's ticking lower. I'm going to just go ahead and sell it. Oh, I did sell. Somehow I got, oh, it bounced right back up. Isn't that crazy? Look how quickly these things moved. So my order went in, it went down. I was going to change, and it's a position. So you can see that I sold one at 30, 40, 20. Okay. Um, and now it's higher. So now I'm actually losing. That's fine. I at the time I made a speculation. I thought it was going lower. Here's the price that I sold it at. Now, what am I doing with this trade? I'm thinking that the S&P 500 is going to go lower. Now, I do have boundaries. All right. If it goes higher and I'm wrong, okay, and it goes back up to 3066, okay, I sold it at 3040.2. If it goes up to 3066, I could potentially lose $258. If it goes up there and touches 3066, this contract will settle. I'm knocked out of the trade, and I have my maximum loss of $258. If, however, it goes down and I was correct and it goes down to 3016, all right, if it goes down to 3016, I would recognize maximum potential profit and I would get knocked out of the trade, and I would get knocked out for a $242 profit. So in this particular instance, I'm trading the S&P 500, the price of the S&P 500, but I've got boundaries around it. I've got a stop loss to the upside since I sold. I got a profit goal to the downside since I sold. Now, what happens if it doesn't touch either one of these? Now, this contract settles in 2 days and 3 hours. And then it's unlikely that in 2 days that it will have stayed in this range, but it's possible. If it stays between 3016 and 3066 for the next 2 days and never touches either one of those prices, my profit or loss on the trade will be the difference from where it settles and where I traded. Since I sold at 3040.2, if it settles higher than that price, I will have some type of loss. I don't know what that loss will be, but the maximum loss would be $258 because once it hits 3066, I'm knocked out. So if it settles between here and 36.6, it'll be some partial loss between where I sold it and where it settles. If it settles lower, all right, if it goes and it settles lower than where I sold it, 3040.2, I would have some potential partial profit, knowing that my maximum profit is $242, and that's if it gets all the way down and touches 3016. So when you trade a knockout, you buy it or you sell it. It's a directional play. It's a delta one. If I buy it, I want it to go up. If I sell it, I want it to go down. And I've got risk parameters on both ends that will knock me out of the trade either for a profit or for a loss, or if it stays in between and something, it never touches one of these, my profit or loss will be the difference from where I traded it and where it settles in 2 days. Now, this is very important. I don't have to wait until expiration or settlement to see what happens. I also don't have to wait for it to touch one of those boundaries. So I sold one, and let's say, my thought process is that it would go down and it might test this. I mean, I'm just guessing here, just for fun. Let's say it got down to 30.22 earlier today. It got down to 30.22 earlier today. So maybe I would want to buy one if it got close to there again, maybe 30.24. I'm going to put 30.24 in. It looks like a level down here. I think it's going to try to test this. So I can go and put 30.24 and 0.00. Okay. And I'm going to place a bid below, and I'm going to hit place order. My order's been received. Wait, what did I do? I sold one. I accidentally just sold one because I wasn't paying attention. See, I needed to be on buy. All right, so let's actually do this again. Let's go to, I wanted to put one down at 30. See, look at that. We all make mistakes. 3024.00. Notice that I'm now using buy. And by the way, you can see in my positions, I've sold two of these. And if it keeps going lower, I might accidentally have been right. I'm going to go ahead and place an order below to buy. Okay, now we see that in the order book. There's my order below to buy one at 30.24 if it comes back down to this level. So I don't have to wait for it to come all the way down to 30.16 and get knocked out. I could buy it and take a partial profit earlier. Okay, I'm allowed to do that. And you know what? In fact, if I wanted to put an offer to sell one higher, I could put an offer to sell one higher. I could put an offer to buy one lower. You can always put an order in between. You don't have to wait to see what happens with your position. You can always trade out of it. I mean, I'm starting to make a little bit of money with this one because it did turn and it's selling down. And you know what? I made a mistake. I actually only want to be short one of these. Maybe I'm just going to buy back my mistake real quickly and say, let's buy one of these back. Um, and that's actually a pretty good idea. Notice now on my positions, I only have one. I bought one back for a partial profit. It was a mistake. Get out of your mistakes early. I only wanted to be short one and I wanted to buy it back. If you want to see that in your history, you can actually see how I accidentally, I sold one. I put an order to sell one much lower and got filled immediately. I went ahead and placed an order to buy one back, and I bought, and I did put my bid below. So you can see your history in your history, and I could see in my positions that I'm short one of these that I had sold up at 30. Oh, that's 3039.9. That was my second one, which is fine. I bought back that first one I sold at 3040.20. And then my current order to buy it back down at 3024. All right, so just a way that you can trade the price of the S&P, but I know when I'm doing it, it's in a very defined risk reward way, and you know what your risk or reward is up front. In the event you do nothing, if it touches one of the boundaries, you're knocked out of the trade. You can always trade out early, and that is also why we always have 4 of these. I mean, you can see we've had to add these bottom ones as the day has gone on. There were knockouts that were up here in this range that got knocked out as we went down. Those contracts got knocked out. The contract settled, and we added one down below, and then it got knocked out again, and we added another one below. We probably had to add all of these. I'm imagining throughout the day. In fact, it looks like this one it did get knocked out, and then we relisted it because it got knocked out. In fact, if you look at it today, I mean, it's been knocked out a couple of times in here, but then we relist it, and then it's right back in. Now, if you thought it was, and maybe you think it's going higher from here, you wanted to buy one, and this is why we give you different ranges. Let's just for fun say that you thought it was going higher, but you wanted to limit your losses. I'm picking this top bracket. You could pick whichever one. I'm going to click on buy to bring that order ticket back. This is why we give these different ranges. If I thought it was going to go higher, and let's put up pricing 30, 40. Let's just make it nice and easy, right around where we are right now. If I were to actually buy one because I thought it was going higher, I bought one closer to the lower boundary. I bought one closer to the floor. And the reason I did that is my maximum potential loss is only $140. If this thing really does drop and touches 30.26, get me out. Maybe this thing's going to keep going lower again. But if I'm expecting or hoping or looking for a rally this afternoon, it gives me more room and more potential profit to the upside because I've moved my ceiling higher as well. If you'll notice, these always total $500. These are 50 point wide spreads. So it's a matter of how close to one of the boundaries, whether you're close to the floor or ceiling, whether you're buying or selling, that will help define your potential risk or reward. If you've got any questions about that, please ask Sophia. Type them into Sophia if that wasn't clear. Now, what I would like to do is show you some of our charting functionality. I was just making up things as I was looking, but we've got some very robust charting functionality. Let's start with indicators. I believe there are 27 different indicators. If you're not familiar with what all of these are, there is a little information button that gives you some basic education on what these do. For instance, if I wanted to put in Bollinger Bands, okay, and I know that this uses moving averages and standard deviations to try to put some boundaries around where you think you might see support and resistance levels so that you could potentially make buy or sell decisions. If I put Bollinger Bands on, which I just did, and notice that down in the left-hand corner, it tells me I have Bollinger Bands on, and the standard is 20 periods. You can customize this however you like. You can customize the standard deviations. You can change how it appears, what you're looking at. All right, I'm just going to leave the standard ones on. And let's put the boundaries around a contract just for perspective. And what Bollinger Bands, the idea is if you're up at an upper band, you would tend to see it want to revert back toward the mean, and which it kind of did here. At which point, this might have been a sell opportunity, and when it came back here, I don't know, it's reverted back to the mean, but when it comes to the lower one, maybe it becomes a buying opportunity. If you don't know what revert to the mean is, there's a moving average in here, and the idea is that products or things have a tendency to want to stay close to their average. So when they move away from their average, eventually they'll want to move back to it. Whether if they're below, eventually they'll want to make it up to it, and if they're above it, eventually they'll want to make it back down to it. Not a buy, sell, or hold recommendation. I just wanted to show you that we've got Bollinger Bands and it can help you make some trading decisions. And we've got a variety of indicators up here. If you want to do some of your own analysis, I'm going to take Bollinger Bands off and I'm going to move over to some of our, every time I do that, it turns that off, some of our drawings. For instance, you might want to put a channel in. I'm going to go ahead and put in a channel, and we can actually sort of do this here. I'm going to click in the upper left-hand corner because we've been in a downtrend. So I've just kind of forced that in, and fitting this, I'm kind of just forcing it in here into a channel. Okay, and you can see that it put a channel where it sort of did. When it hit the upper level, it was resistance. When it hit the lower level, it was support. It broke through it pretty severely here. So this channel clearly didn't make any sense, but it did kind of come back into this range again. You can put your own channels. You can put your own support and resistance levels. You can put your own, some people like Fibonacci retracements. And here we're in a downtrend. I'm just going to do a Fibonacci for you as well, where we start in the upper left-hand corner, and then we go and we try to draw a line on how this is trending. And then we click in the bottom right-hand corner, and it's going to give me the mathematical Fibonacci levels. And you can see how there are times where it just went straight through them, and other times where these levels acted as support and resistance. It looks like this level right here, which is, I'm going to hover on it, right around 30, 35 seems to be a pretty interesting level where this is either going to be support, or if it breaks through, it'll end up becoming the resistance. If you're not familiar with this, again, there's some information there. I could also recommend you go to our partner, Daily FX, and they've got a lot of education up there as well. Any questions on this, please type them into Sophie. I'm really here just to kind of show you how the platform works, how the chart works, get you comfortable with understanding the products, and showing you how you can do some of your own analysis with some of the tools that we've got. All right, from knockouts, I'm going to go ahead and click on our markets up here in the left-hand corner. I'm going to mention call spreads before we jump over to binaries. The reason I want to mention call spreads is some people don't like the knockout functionality. They want to have a little bit more room in case um, they have an opinion, but if it touches their boundary, they don't want to be knocked out. That's a call spread. A call spread is a knockout with optionality on it. So here I'm going to choose the S&P 500 daily and bring up that. And let's move this over and let's get rid of let's hide some of our drawings. Let's just clear it all off so we can see a little bit cleaner. Good. With the call spread, and I just wanted to show this, um, here's the range on this call spread, which is 30, 70, 31, 10. Notice how if you had actually bought this call spread in here, all right, and if it were a knockout, you got knocked out. You're done. Your maximum loss happened. Okay, but in a call spread, you're not knocked out. But as it's continued to go lower and lower and lower, the probability of that actually doing anything becomes, for it to come back is low, and there is a premium associated with these. So a little bit more, a little bit more dynamic. This particular call spread, here you go. If you know, it's the 20, 90, 30, 70. All right. Now these, if you'll notice, are $800 contracts. So they're bigger contracts. They're not the 500 of the knockouts. They're 800. When you do trade them, they're not Delta One. Notice how they don't track exactly to the price of the underlying. That is the premium value that's associated with the fact that if it were to touch one of the boundaries, either to the upside or to the downside, you wouldn't be knocked out. You would still be in the trade. So it's a way to take a directional play, but again, with boundaries and defined, known maximum potential profit, maximum potential loss. And from there, I just wanted to mention that because it's people are curious about the call spreads. Knockout's definitely more popular just because it's very defined and it trades exactly with the price of the underlying. And they're a little bit smaller range, so smaller dollar contracts. Now let's look over at binaries. And what is a binary? If you're not familiar with binary options, it's a simple yes or no proposition. I'm going to click into our binaries right now, and I'm going to look at a commodity, and I'm going to look at crude oil. It's been pretty popular. Let's just go ahead and take a look at the daily. Yeah, here, we'll just take a look. I'm just going to pick one. I'm going to go ahead and move. Oops, I didn't want to do that. I want to hide that down there. And let's take a look at what are knockouts. Now, you're not trading, you are trading what you are predicting the price of oil will be. It's a prediction. So the question here is, will oil finish higher and settle higher than $38 a barrel? And this expires in 1 hour and 50 minutes. In the next hour and 50 minutes, will it settle higher than 38? And what you're trading is the probability. Here, I mean, you can see, look at these markets. It's a 23 and a quarter, 24 and a quarter. So right in the middle would be 23.75. The market is saying there's a 23.75 chance that oil will settle higher than 38, not trade higher. It's got to close in 1 hour and 50 minutes. If it closes and it's higher than 38.00, so 38.01, this contract will settle at $100. All right. So if I bought this now, I could risk, and let's just put it right between the 23.75 is what we said. If I bought one right now, right in the middle of the market, I would be risking $23.75 to potentially make $76.25 if oil finishes higher than 38. If it does not settle higher than 38, so it settles at 38 or lower, this contract will settle at zero. in which case I will have lost my $23.75. That is a binary. It's a yes or no. People are familiar with this concept. Is this going to happen? Yes or no? Do I think oil will be above 38? Yes or no? If I think yes, I buy. If I think no, I sell. Um, Notice that when it's in the money, I mean, right now, the lower contract, 37.60. All right, I'm going to just click on that one for a second. It's already higher than that. We're at 37.80, right? It tells me the indicative price. So right now the market is saying there's a 76% chance that it will stay above here. If I thought it was going to stay above here and settle above here, I could pay $76 and I could risk $76.50. But if it settles below 37.60, so if it settles at 37.60 or lower, and by the way, if I look down, it's actually traded there a lower there, all right, this week. If it settles below there, it will go to zero. So since I'm paying $76.50 if I bought it, that's what I would lose. It would go to zero. If I bought it and it stays above and it goes to 100, I could potentially make $23.50. So a higher probability trade, but a lower payout with a little bit more risk. You've got to make that determination. The price of these contracts will swing wildly as you get close to settlement, because every one of these will either go to zero or 100. So every contract, that's the binary nature of it. Now, here's the interesting thing is just because there's an expiration doesn't mean I have to wait till expiration to see what's going to happen. I can always choose. So for instance, if I wanted to buy one of these right now because it looks like oil is rallying a little bit, let's just go ahead and just buy one. My order was received. I actually, oh, and I think I actually ended up, I did buy one. Okay, so I bought one at 25 and a half. Okay, so I did buy one. Now, I don't have to wait until settlement to see what happens. This is going to settle in an hour and 46 minutes. If oil keeps going higher, the price of this might go to 50.50. And if I wanted to, I could potentially sell it. I paid 25.50. Maybe I would want to sell one higher just at 50. All right, up above. If it were to continue to go higher, I can place that order. Oh, I actually just did that again, didn't I? I had it was on buy. I wanted to be on sell. And that's why we actually have the red and the blue. Notice that blue is where I need it to settle at expiration for it to be profitable. Red is where I would need it to be if I'm selling. So actually, let's go ahead and do this. I'm just going to go ahead and put 50 in here. I'm going to go ahead and make it for two of those because I accidentally sold two. I'm going to place my order or bought two. So there's my order to sell those two back out. I'd sell them if it went up to 50. And it's rallying. It might get there. Notice my positions. I'm currently long two. Okay, I accidentally bought another one of those. Pay attention to buy or sell. I've made that mistake twice. um, but the price of these will change as the price of the underlying moves, as the probabilities change. I mean, now it's actually trading lower. I still have an hour and 45 minutes, and notice how the probabilities have changed. Now, I said I was going to really give you a dynamic view of how this all looks. Let's do this in a 5-minute binary. I mean, 5 minutes. These are all foreign exchange. Let's take a look at the euro. Oh, you're in demo and the prices aren't here. Or are we right at a settlement? That's why. We just finished 5 minutes. We were right between contracts. Okay, here's the euro. I'm going to go ahead and just click on one. Okay, I'm going to go ahead and hide this. And I'm going to zoom in here on our chart. Let's make this a 1-day chart. Let's make this a 1-minute chart. Um, All right, I'm going to zoom in a little bit more, and here we go. We're going to watch this horse race. Notice how there's 4 minutes and 16 seconds to go. This is price action. If you want to see how binaries trade, notice how we've got these levels, and for each one of these, is it going to be above or below? Right now, um, the 112.75 level is close to where it is right now, and so you see the probabilities are right around 50-50. Okay, it's a 50% probability. It's either going to settle at 0 if it settles below, or 100 if it settles above. Notice that this one up here, there's only a 20% probability. As time ticks on, 3.5 minutes, these probabilities will change. Um, and the ones down here will become a higher likelihood. The ones up here will become a lower likelihood. Look at as the euro is sold off here. Let's watch this. This one that was just 50% probability is now trading. Oh, and now it looks like it's bouncing back up. You can see how volatile the price action is. I don't know whether this is going up or down, but it's like a horse race. This is going to end in 3 minutes and 2 seconds, 3 minutes and 1 second, and the probabilities on these are going to move quickly, and they're going to move either toward 100 because because the answer is going to be yes and it's going to settle at 100, or they're going to move towards 0 because the probability of this question being true are going to be closer to 0. As it moves around, you will watch. I mean, right now there's not a lot of movement, and so there's not a lot of price movement, but we still have 2.5 minutes to go. But I wanted you to see how quickly these prices can change. And in the last minute, they change dramatically. And in the last, I'm going to say maybe 20, 25 seconds, you'll actually see them generally go blank because it's at that point that nobody really wants to take the risk, because anything can happen. It's either going to be 0 or 100. So whatever you've got, you're going to have to watch the end of the race. But the fact that you can trade through the race during the event, I got 1 minute and 50 seconds here. I'm looking, and I don't think it's going to come back. Let's just go ahead and just sell one of these. Oh, I put my order in at 30, okay, and it's trading lower. Let's see if I can't. Let's see if I can actually sell one of these. Let's modify my order. Let's make it up. Oh, it's just going lower and lower. Oops, what did I do? I think I actually sold it. I did. I actually got filled at 30. So I sold one of these. All right. There's 1 minute and 8 seconds. I sold one at 30. And it's as if it stays, if it stays down below, we're going to watch this decay away. No, it's rallying back. I mean, we're watching this change real time. This is either going to go to 0 or 100. So I sold one at 30. The most I can make is $30. That's if it stays below. The most I can lose is 70. And it's a really, and it looks like it's going to stay below here. There's 38 seconds. Now, if I'm not comfortable, I could try to buy it back for, say, 10. And there's my bid. Maybe someone will sell it to me. If not, here's 22 seconds. I don't know what's going to happen. I said I'd buy it back for 10, 17 seconds. No one's going to, and we're in a demo environment too, remember. But at this point, I don't even want to buy it. We're going to watch. I sold it at 30. It's that's it. This thing settles in 1 second. It's over. Okay, I sold it at 30. I made my $30. That's it. Now, I could have lost 70 if it had rallied above, but that's how binaries work. I wanted you to see that because it is very dynamic. And you can see how this contract already expired, and then as soon as that contract expires, we list new ones, and a new game begins. 4 minutes and 37 seconds. So hopefully you kind of understood that, where there are lots of price action in these 5 minutes, but you'll see that same price action, maybe not as dramatic in 20 minutes, and those are all in our indexes. And if that's a little crazy for you, again, um, we've got a couple, we got hourly contracts throughout the day, a daily contract, and even a weekly contract. But they'll move similar to what you just saw. It just won't be as amplified as it is in a 5 minute. But in the last 5 minutes of any one of these contracts, it'll look like that. So it's one of those things where, depending upon your risk appetite, you can either take your risk you could take your risk off or leave your risk on going into the final seconds of settlement. But that is binary options, yes or no. If it's yes and you think that's going to be true, you buy it. If no, you sell it, and it's binary. It's only two outcomes. There's only two outcomes. It is either 0 or 100. If I bought it and it goes to 100, I make money. If I bought it and it goes to 0, I lose money. On the flip side, if I sell it and it goes to 0, I make money. If I sell it and it goes to 100, I lose money. All right, with that, hopefully you've been keeping Sophia busy in the background with questions. I would again encourage you to reach out to us if you need any help. Call us, email us, chat with us. Um, check out our YouTube channel, see what content is available up there. Be sure to check out our website and our new exciting new website. We keep the recorded content and some educational content there as well. And yes, we did that virtual education summit a month ago. Stay posted. We're going to do a summer education summit probably in August. And hopefully when we advertise for that, you'll be able to join us. And in the meantime, I want to wish everyone to one, stay safe, hopefully stay sane during these crazy times, and good luck in the markets.